This conference will now be recorded.
All right, good morning, everybody. This is Greg Morton. It is Sunday, April 24th, 2022. This is the weekend video update for Canslim growth stock investors. As always, this is for educational purposes only, not recommending any stocks or securities to buy or sell, and all investing has substantial risk of big losses. We want to learn first and only then invest. So we're going to look at the M factor. We're going to ask, what do we see this week? Constructive action or destructive action? So hint, we're back to a train wreck out there. Charts are just trashed. And I'll mention our monthly educational meeting. So as always, we'll start with the M factor, which is the most important letter in Canslim. And just a reminder, the key principle on the M, extensive O'Neill research, not opinion, shows that 3 out of 4 stocks follow the general market trend. And I've never seen anybody research or dispute this. If it's out there, send me a link to it. But this certainly does seem to be true. We need to stay in step with the trend. Otherwise, we're going to have a very bad outcome. And I think about it like this. If you had a boat or a ship that was getting ready to sail into a Category 5 storm, and you knew that only 1 of every 4 ships would make it through the storm, and 75 of the ships would sink, are you going to get on one of those ships? No, you're not. And that's where we are in this current environment. So you cannot win when the trend is not your friend. Even strong swimmers are going to have issues going upstream, which right now kind of looks like this. So that's what we are facing now. So looking at the M factor, per O'Neill, IBD, we want to diagnose, we want to interpret, we do not want to predict. And we're looking at 3 things, and this is the order of priority. So number 1 is the action of leading stocks. So those are getting hit, crashed, particularly the recent leaders from the 2020 super strong bull market. Actions of stocks owned, I mean, the group teaching portfolios back to about 0 exposure. We'll take a look at that. Sell rules this week just kicked us out of everything almost. And then the market pulse, distribution day count, price and volume on the indexes. And of course, this third one is the least important. I know there were some people on Twitter that I was discussing with. They were talking about how IBD was late in making their market direction call. Again, this is just one thing that we look at. So keep that in mind. That's why I do the coloring book, because I have more things I want to look at to evaluate the M factor. You just can't use that little market pulse snapshot as a litmus test and say, oh, this works, I'm going to just go with that. You have to look at other things and make your decision on, hey, am I going to be pushing on the gas? Am I going to be coasting? Or am I going to be putting on the brakes? So you have to sort of do your own evaluation. So let's step over there and just do that. Let me exit out of this and go to MarketSmith. Start with the index charts. Here's the daily on the NASDAQ. So this just looks really bad right now. RS lines plunging. These lines are 10% off the top and 20% off the top, which are just sort of the standard definitions, and this one's 25% off the top. So these are standard definitions. I would note we are 5 months into this now. Here's the peak back here, which we can see in hindsight on the NASDAQ. November 22nd was right around Thanksgiving time. And we are now really about exactly 5 months into the current downtrend that we can see on the charts. Here was the last follow-through day that we had. There's the low of the follow-through day, that red line right there. So once we close below that, right here, we have over a 90% failure of this rally not working. It will totally officially fall when it undercuts the most recent low, which is right there. So when it comes down to that, it will technically fail, but of course IBD's already gone back to incorrection, and they've been telling us in the big picture column for a couple weeks now that growth stocks are in a bear market. So we're back under all moving average lines. The 50 has still crossed over the 200. The 200's way up here. The 10 and the 21, 10's already crossed over the 50, 21's crossed over the 50. They're back in downtrends. Just nothing really constructive there. In fact, let's look at the weekly chart also. So I've sort of redrawn the legs down. I had one, and then I had this as the second leg, and this is the third leg. Now, as we study it, I'm thinking this is the first leg, this is the second leg, and we're potentially working on the third leg. Here's prior resistance, support over here on the left. So we're watching to see if that gets broken and we get a third leg down. And let's look at the monthly real quick. So just to look at the historical bears. So here's the 2002 dot-com crash. This was a 78% drop in the NASDAQ, lasted 2.5 years. And the interesting thing is it spent 7 months. This almost looks like it was going sideways, but it was down 26.7%. And then it fell another 70% all the way to the bottom. And then we see the same thing in the fall, in the financial crisis bear market. Here we went 20% off the top in 10 months to get there, and then fell 44.5% from that. So it was a 56% drop on the NASDAQ over 17 months. And then the 2018, the fall 2018 bear market, which was really started by the Fed talk. They were going to start easing and everything else back then, and then they backed off of it. But this was about a 24% drop over 4 months. So just go back again. Remember, we're now 5 months in. Are we going to get one of those where we're back in bear market territory, we're under the 20% line? Are we going to get that, and then are we going to have another plunge like we did historically? I don't know, no way to predict, but it's important to look at precedent. Now, the other indexes, we won't spend as much time on these. Again, the S&P 500 looks like it could close below the follow-through day low. We're already back in correction, so that's sort of where we are. There's the 10% offline and there's the 20% offline. So it's actually not even hit bear market territory yet. Here's a NYSE. Man, those are too ugly daily bars. Just outside reversal day, closing at the low of the day, crashing through the 50, volumes up, distribution day. Amazingly, the RS line still looks best on that index. And the Dow, here's the Dow heading back, not at the 10% line, but again, below all moving averages. It's come up to the 200 twice now, just bumps its head on it. Russell back in 20% line, so back in bear market territory. Just looks bad under all moving average lines. Same thing on the S&P 600, although it's not back to bear market territory yet. But none of that looks real good. Let's look at the coloring book and just sort of see it graphically. So couple things to notice. Our buy sell day count, now we only have 7 buying days, 10 selling days. So it looked like we were battling, trying to get back even, trying to get buying days ahead of selling days, and now have flipped suddenly. Got a lot of distribution. We're up to 6 on the NASDAQ, 7 on the S&P 500, and 7 on the Dow. We also have clustering, which is 4 in an 8-day window. You got clustering right there. You had 4 in a 6-day window. You had clustering right there. Had clustering on the S&P 500. So that's like distribution on steroids. Friday was nasty, flipped everything back to red. My distribution day counts now go to white. IBD stops counting when we're in a correction, but I keep counting. So they just flip to white. That means IBD is not counting, but I am. All the MMTS went back to red. The window of opportunities closed. The Matt Caruso high-low indicator on the NASDAQ has been ugly for a while. It's been better on the NYSE, but it showed weakness also on Friday. So here's our 25-day window back here. I may have forgotten to move that, maybe down 1. I'll have to go back and count. So Friday was just really wicked selling. NASDAQ was off 2.55%, S&P 500 2.7, Dow was off 981 points, 2.82. Everything flipped to red, and really, again, Thursday was a really nasty day too. So none of that looks constructive. Just showing us a lot of red flags. And then the group teaching portfolio, yeah, we're only 15% invested. So just slammed us out of everything except Regeneron this week. The uranium plays didn't work. They stopped out. So growth, and then even if you were in the commodities, they backed off some this week. So none of that looks good is about all I can say. So time to be very careful. So we looked at that, some keynotes, window of opportunities closed, all the MMTS is back to red. These are all the things to read market direction. Distribution days are racking up. We have clustering, market school model has gone to zero, exposure, buy sell day count. So it's more of a, these are Mark Minervini terms. Is it an accumulation dominant tape or a distribution dominant tape? Well, right now it looks like a distribution dominant tape. The Matt Caruso, the way he tracks the high lows on the NASDAQ and the NYSE separately, been showing NASDAQ weakness, New York Stock Exchange strength. That was just a little bit, maybe I should have colored that green, but it backed off on Friday. NASDAQ closed below the follow through day low. So statistically, regarding research from a couple people, we have a strong chance of failure. Eric Kroll says it's over 90% once that happens. And charts are getting whacked, and growth has been in a bear market, and IBD has been telling us that. So we're in red flag conditions. It's ugly out there, slippery, wet, whatever. No, just say no. Sort of where we are. Got a lot of headline risk. Had the Fed talk again, which caused the 2018 bear market in the fall. Now we've got the Fed walk. How fast, how far on rates, and what's this balance sheet reduction going to look like? And so coincidentally, the Fed meeting's a week from this coming Wednesday. So we're only 6 trading days away from the start of that meeting on a Tuesday. Got inflation, got supply chain issues. Q1 earnings season has now started. It's really going to ramp up this week. Pretty ugly so far. IEC Netflix Exhibit 1. And then the war situation persist day 60 today, if I have my count right. So lots of things out there. And again, Canslim works better when the NASDAQ's trending above an uptrending 50-day SMA line. Works best when it's trending above an uptrending 21-day EMA line. And we're real far away from better and best. Again, been slapped back down. Pretty much bring out your dead market from Monty Python, one of my favorite movies because I have a warped sense of humor. So let's look at some charts real quick. We'll go back to Market Smith. I just threw some things in here. Let's go to weekly. Let's just look at some ugliness first. So here's ARC, good proxy for growth. They're off over 60% again, about to take out the low. This is off the 52-week high, so that's real ugly. I know Kathy Wood in those interviews say that people don't do well betting against disruption. Well, people aren't betting against disruption. They're betting against the way she invests in disruption. And she just keeps buying those things on the way down. There's a good Morningstar article pointing out some of the flaws with ARC, so you might want to Google that and find it, including that guy pointing out they do not have a risk manager in their company other than her who's making the investment decision. So that's a little dangerous. So Netflix got creamed this week as that made the headline. Some other ones that had led, so Coin, ugly, way below. That was a direct listing, but so the expected price was right at that 250 range, if I remember correctly. Roblox, just Path, several of these are in the ARC funds. I mean, these are just trashed. Upstart, ugly. HCA, wow, ugly outside reversal week this week. MRK, so this is one that's holding up. I did, put something decent in there. They have earnings this week. It's got a stage 1 cup with handle. We'll see how they do. Had a possible early entry back there, but again, if that has a viable gap up, is one going to take it or not? This is when we were in the group teaching portfolio and came out. Let's go back to the daily, go back 2 days on this one. So this, 2 trading days ago, this to me was looking like, hey, maybe this is going to set up a new potential flat base. We took profits in this one at the profit goals. And looked like we were about halfway in, 2.5 weeks into a 5-week flat base. And then all of a sudden we had the next 2 days. So just an ugly bar on that chart. You can see the change in character. Look at that volume at the bottom of the page. And then the next day, this was the day all the mining stocks and everything got hit. Another ugly day, closes at the bottom of the range. Have to see if it even finds support at the 50-day there. So it got ugly. Coal stocks have been doing well. Again, two ugly bars on that one. Another coal stock, ugly 1, 2, 3, 4, 6 days down in a row on some, pretty heavy volume. I told you the uranium plays, these were the ETFs. So these things even look like stocks are getting hit so hard on volume. And some of this was, like I said, the mining stocks got hit. So they fell in that category, got killed too. And then even the recent IPO I mentioned, boom, down through the IPO price of 24. This was a shipper and natural gas, some good earnings growth coming up. And the market's just taking everything off at the knees pretty much right now. So let's go back real quick. So our monthly meetings, our last meeting was April 12th. I'll get the date for the May one up soon. When I do, you sign up at the Stockyard Meetup site. That's what the tuition is. If you want to order them later, you can get recording, slide decks, and all the links. It's just a little higher price, so it's cheaper to sign up for the meeting. And if you're a first timer, when I get the May date up there, I send you a copy of the last meeting's recording and slide decks. So there's everything we covered in April, did some Canslim nuggets like I always try to do, new stuff that came up on IBD Live, did some Market Smith, and then we spent a lot of time talking about wading back in and after a follow-through day, how does one do this? When I was putting that topic together, I thought, well, that's, the cows are already out of the barn. You're closing that door a little bit late, but here we are back in a correction. So very pertinent to study that topic is now we're looking for a rally day and a follow-through day once again. We looked at the cousin stocks in the EV space, kind of following up on that a little bit each month. Looked at the group teaching portfolio, the IPO market. That's where I mentioned EE that we looked at. So it looks like everything else. Prior meetings are available. Good time to study again since the no button's on. If you don't have a set of written sell rules, you really need those. I think this would take most people's trading at least to the next level or a new level. So I spent 3 monthly meetings covering that. I was surprised it took that much time, but it did. So if you go through those, you can order those. You'd have a set of written sell rules, other educational topics, working on the weekend routine. Did a big updated presentation on that, how to pick one Canslim stock over another Canslim stocks, what are the strength of things. Followed up on that in October. Looked at bear markets in January, and I didn't even put the April one in there yet, but those are the things we talked about. So if you're interested, you can send me an email. I'll send you the list and how you order those. So the meetup website, so the Greenville East Side IBD meetup site is the official one with IBD, and then the Stockyard meetup site is the one I use to do the online meetings. And then you can email me at that email address for information on ordering prior webinars. You can follow me on Twitter, and of course you're on the Stockyard YouTube page if you're watching this, so like and subscribe. There's other videos on there. There's teaching on how to use that group teaching portfolio spreadsheet. Our May 2021 meetings on there in full. I did a video on the 8-week hold rule, which is really an 8-week hold exception, so you can look at all those for educational things. So that's it. I'm out of here. Y'all have a good weekend routine, and we'll see what this week, and then got a lot of earnings this week, and then the next week, as I said, is the Fed meeting. So that's it.